Welcome to today's video, how to avoid taxes on a brokerage account. I'm sure we all want to pay the least amount in taxes as possible. So I'm going to cover exactly what a brokerage account is and how we can avoid paying taxes or pay the least amount in taxes as possible. So let's dive right in. All right, we are going to talk about what a brokerage account is because I don't want anyone being confused. And then of course, we're going to talk about avoiding taxes and how you can pay 0% in taxes. So what exactly is a brokerage account? So a brokerage account can actually be a retirement account. It can also be a taxable brokerage account. There are a number of different accounts it can be. For example, it can be a Roth IRA brokerage account, or a traditional IRA brokerage account, or a taxable brokerage account. We just want to be careful in how we are defining brokerage account. A brokerage account is an investment account that lets you invest in the stock market. A brokerage account can also be a 401k. So those are the accounts I'm going to talk about in today's video. All right, the easiest way to avoid paying taxes on a brokerage account is to invest in tax-advantaged accounts. Contributions made to these accounts are either tax deductible or made with after-tax dollars. Going back to my earlier example, if you set up a Roth IRA brokerage account, you are going to pay taxes when you put money in, so that money will grow tax-free, and then when you pull it out, you are going to pull it out completely tax-free. So you are avoiding paying taxes on all of that money you are pulling out. And then with a traditional IRA, you are not going to pay taxes when you put that money into your IRA. You're going to pay taxes when you pull that money out. And then with a traditional 401k, you are going to pay taxes when you pull that money out, just like a traditional IRA. But if you have a Roth 401k, then you are paying taxes when you put that money in. So it's growing tax-free inside of your Roth 401k. And there is a little caveat: if your employer is giving you a match to your Roth 401k, they are actually matching just a 401k. So the money they are putting in for you will be taxed when you pull it out. And then with a taxable brokerage account, you are actually able to invest that money, and as long as you hold it for at least 1 year, then depending on how much you are pulling out, you will actually pay 0% in federal income taxes. This is what's called a long-term capital gains tax rate, and I want to show you the rates for 2023 so that you can have a really good idea on how you can use this to your benefit. As you can see on this chart, if you are single and you pull out up to $44,625, you are going to be paying a 0% tax rate for your federal income taxes, which is pretty amazing. And then it goes up to 15% if you are pulling out anywhere from $44,626 to $492,300. And then if you are a baller and you're pulling out over $492,300, you're going to pay 20% on your federal income taxes for these gains. And I want to be clear about this. This is just the gain that you have made on your investment. For example, if you buy one share of a certain company for $100, and then you sell later, after a year at least, you sell that one share for $200, then you've made $100. And that is what you will be taxed on. And then going back to the chart, if you are married, filing jointly, then you can pull out up to $89,250 and pay that 0% tax rate. And if you pull out $89,251 up to $553,850, you will pay that 15% tax rate. So we really want to make sure that we are holding our investments in our taxable brokerage account for at least 1 year. That way we can pay a lot less in taxes, and even 0%. And then another way that we can avoid taxes on a brokerage account is by using the strategy tax loss harvesting. And tax loss harvesting involves selling losing investments to offset your gains and reduce your tax bill. This strategy can help you minimize taxes on your brokerage account. Keep in mind that there are rules around tax loss harvesting, such as the wash sell rule, which prevents you from buying back the same or a substantially similar security within 30 days. So for example, if you invested in Amazon stock and that was doing really, really well, so you pulled out some of your Amazon stock and then you had another stock, maybe you invested in the Caribbean cruise line and that was at a loss, then you could offset your gains from your Amazon stock that you sold because you sold your Caribbean stock at a loss. And we want to keep in mind that wash sell rule. We can't just sell our Caribbean stock at a loss and then rebuy it within 30 days because of the wash sell rule. That wouldn't allow us to capitalize on the loss that we received. And then another way to avoid taxes or pay a lower amount in taxes is to invest in tax efficient funds. Certain types of investments such as index funds or ETFs are more efficient, more tax efficient than other investments. These certain funds can have lower turnover rates, meaning they buy and sell the securities or the stocks within that fund less often, which can result in fewer capital gains distributions. So if we do have a taxable brokerage account set up that we are investing in, we want to make sure that we are choosing investments that are going to be more tax efficient. So it could even be investments that don't pay any dividends at all, or making sure that the investments we do choose are going to have that lower turnover rate so that we aren't paying as much in taxes. And if you want to know more about dividends, I have another video about that. I will leave a link above. You can check that out later on. Those are just a few different ways you can avoid paying taxes on a brokerage account. And if you want to reduce your taxes, one thing that I've been able to do is actually set up my own business. And this helps me reduce my taxes as well because I can deduct a lot of my business expenses. For example, my YouTube studio that is in my home, I can write that off on my taxes. I can write off some of my cell phone bill and other types of expenses. So that is just one bonus way to help reduce your taxes. If you are at all interested in starting a business, and it doesn't have to be a full-time thing, it can be something very, very small that doesn't take a lot of time, but that way you can have more deductions on your taxes. And if you want even more knowledge about investing in the stock market, I have a free masterclass that goes over how I can help you invest in the stock market and help you avoid those taxes. I will leave a link to that masterclass below in the description. You can click on that and check out the free masterclass. Comment below and tell me one legal way you have been able to avoid taxes. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.